Okay, everybody, it's me, Gregory Mannarino. Friday, September 15th, 2023. This is my pre-market report. Let's do this, and I want to talk to you about, some fun at the track yesterday later on. So let's start off with this. We heard from billionaire investor, hedge fund manager Ray Dalio. Ray Dalio is telling people right now, don't buy debt. Don't buy debt. Now, it's very possible that this guy has some kind of information here that you and I are not privy to. You and I understand already that this debt market is a ticking time bomb and it's going to go off. It's going to go off. It's just a matter of when. This current environment is very unique, what we're seeing right now. And just hold that thought for a moment here. But the fact that we have, and this guy here, Ray Dalio, he's a straight shooter. I don't know how many of you know his work, but if he's telling you not to buy debt, that should raise some red flags for you. It certainly does for me. This environment, again, going back to what I was going to say, it's just so absolutely twisted. I don't know another way to put this. I mean, let's look at this market here. This morning, stock futures are higher. Not anything major, but higher nonetheless. What's driving this market should be as clear to you as it is to me if you understand the dynamics here. Clearly, and I mean clearly, the market believes the Fed is going to cut rates sooner than later. People like Jeffrey Gundlach believe this is true. I happen to believe the opposite of that. I think the Fed is going to maybe pause at one point, but with regard to cutting rates, it ain't happening. They got the people by the throat, and they're going to continue to tighten that noose around everybody's neck. That's the real reason why the Fed is raising rates. It has nothing to do with stopping inflation. I mean, by their own numbers, even yesterday, inflation is surging, outpacing any projection that has been put forth by the Federal Reserve at this particular time, or any central bank for that matter. They all put out their projections. They've been all wrong, really, honestly, and you and I have got it right. How does that work? They know exactly what they're doing. This is 100% deliberate, and you all know that. Excuse me. I'm not sweating. I just happened to put a little water and gel in the hairdo here prior to this video. Anyway, so again, what's driving the market here is several fold. Number one, we got this market pricing in cuts. I don't think they're coming anytime soon. Number two is crude oil. Crude oil it's surging. Even this morning, it is ripping higher here, and you know how this works. Higher crude boosts the energy sector as a whole, boosts the financial sector as a whole. It pulls the market higher. And then you got the Fed here. You and I covered exactly what we believed would happen just a few months ago. We said either, number one, the Fed was going to weaken the dollar somehow. They haven't managed to do that. Number two, they would get in here and buy more debt, suppressing the 10-year yield. Well, that hasn't happened either. Or number three, and this is what's going on, at least in my opinion here, the Fed is buying the market. They buy large cap stocks to prop it up. You all know that. So again, it's just more fakery, more distortions, more of a disaster area that's going to eventually occur on the back of all this. And let me ask you this. Yesterday we covered at length what's happening here, the Federal Reserve's discount window. So again, what do we know by their own numbers? 22%. Think about what I'm going to say here. 22% of U.S. commercial banks, the big banks, are going to the Fed to borrow cash at zero so they can lend it out at whatever they want to lend it. Now, there's that 22% plus another 55% that are applying to do the same. Not only that, we have this repo, I call it a scam, because it is a scam, a repo scam, where they're trying to fool the market. They're trying to trick the market into thinking that it's more liquid. I mean, you have, as of right now, if you were to check this for yourself, open up another search engine and look up the Fed's reverse repo program, $1.5 trillion last night, and the night before that, and the night before that, and the night before that, going back many, many, many months, is passing just between institutions overnight. $1.5 trillion. This is tricking the market into believing it's more liquid than it is. It's an incredible thing to see. And I'm telling you again, right here and right now, and I hope you're listening to me, that the banks are in trouble. If you can't see what's happening, and you and I called this out again before anybody else, people, and you know, honestly, we can wear that as a badge of honor. No loans, no deposits, no deals. Over a year ago, we're watching what's happening here to the banks, to the financial system, but they're propping it up, faking liquidity. You have these commercial banks with a main line right to the Federal Reserve, for which, in case you don't know, they're denying to the smaller institutions. Why? Why are they denying smaller and regional institutions the same main line to the Fed that the commercial banks are getting here? Because they want to shut them down. They want to consolidate it. You know all this. We've covered this a million freaking times. Anyway, so right off the bat, the first question to you, okay, and I will read the comments, you know, this is not just my thing, it's our thing. Why do you believe that billionaire Ray Dalio is telling people specifically don't buy debt? So that's question number one. Now, comment number two from me is, you know, Robert Kiyosaki, I hope I'm saying his name correctly here. He is saying something that you and I have known for like 10 years, that silver is the biggest market bargain today. Like, in other words, it's on sale. And here I have to agree with the guy. Absolutely. Silver is my favorite asset. Absolute freaking. Now, something else I want to talk to you about. And this is not getting any media attention at all that I've been able to see. So every single month now, the debt has been growing at least $500 billion per month. What does that tell you? Does that sound like we're thriving, like we're booming? You know, does any of this sound like that to you with the economic news that just keeps coming in worse and worse and worse? And this is why people like Jeffrey Gundlach believe the Fed's going to cut rates sooner than later, because the bad economic news doesn't stop. The bad economic news is a direct result of what central banks are doing, keeping pressure on the middle class, trying to crush small businesses here. That's what they're doing to fulfill the corporate agenda. I know I'm preaching to the choir here, but that's why I'm convinced that they are not going to let up. They're not going to let up. They got a stranglehold on the world, and this is what they want to do. They are trying to fulfill their end game very successfully, and you know what I'm going to tell you, to be the lenders and buyers of last resort. People, they're the enemy. They are the freaking enemy, and we got to get rid of these institutions, but we can't. Again, they're creating slaves to the system, as you know. Every day, more people are becoming enslaved to it. So they got the world by the throat again. It's an incredible thing to see, and it's horrible. Anyway, so with that said, stock futures right now, as I said, are slightly in the green. 10-year yield higher, though. Risk in this market continues to rise. But even with that, because the MMRI, last time I just looked at, is 282. MMRI, Mannarino Market Risk Indicator, link below, free to everybody who wants to use it. Even with that, this market seems to be obviously defying gravity despite risk. I mean, we are, 18 points away from extreme risk? Doesn't matter to this market because it's convinced that the Fed's going to cut rates, and it's crude oil. Crude oil, people, you know what I'm going to tell you, it's the lifeblood of the system. If they can keep that propped up, I mean, it takes the two largest sectors of the market, the financial sector and the energy sector, and props them up. So what's the effect? Cause and effect. Prop those sectors up, the whole market goes up with it, and then convince the market that rates are going to be cut by the Federal Reserve sooner than later. Anyway, it's a freak show, man. It's a freak show. You all know that. Anyway, people, look, thank you. Thank all of you for being here with me. Anyway, so last night, just real quick, I ran into Andrew from the Tesla Played channel. I did run my Copo yesterday. I ran it 2 times. My first run, I did a 970 at 154 miles an hour. I could not get the car to hook for nothing. I played around with the tire pressure for the second round. It was worse. So I put the car on the trailer and took it home. So I know I got my work cut out for me, but there's at least a second left in this car. This car should be running 870s. After how badly I blew the tires off coming off the line, the tires started to shake so bad I felt like my fillings were going to get rattled out. The car's got like 1,000 horsepower, so you can only imagine what that felt like to me. And it's quite an experience. But anyway, Andrew, a great guy. Check out his channel. I am going to put a link in the description of this video. Subscribe to his channel because him and I are going to set up some nice little match races, and I think you guys and girls are going to like it once I get this Copo dialed in. All right, with that said, people, I love all of you from the heart, and I mean this with every fiber of my being. Please do comment on what Ray Dalio said about don't buying debt. No shock about Robert Kiyosaki talking about silver being the best bargain right now. Debt surging over $500 billion every single month. You can't make that stuff up. We're in a full-blown liquidity crisis. Banks going to the discount window of the Fed. Main line here. They're propping up the system. They're propping up a dead system. And it's going to end very, very badly for all of us here. All right, people, that's where we stand. All right, I will see all of you live, 4:05 p.m. Eastern Daylight Time, and have some questions for me. All right, we're going to cover it. I'll see you later.